Alright, so good morning, dear traders, or good afternoon, or good evening, wherever you are watching from in this world. My name is Winston. I'm a trader. I've been trading for years now. I think about 5, 6, 7 years now. I'm not so sure. Lost count. But anyways, I'm just waiting for this the core retail sales to come out in 5 minutes time. Then I need to discuss something with you guys regarding this new trading strategy that I have been working on, and yeah, I don't, because it goes against my trading instinct. This strategy with the using the Fibonacci and so forth. So I don't know if I will be able to use that strategy. Although yes, it might. In the back testing it worked okay. But trading it in real life goes against everything I know as a trader, because there's literally anyways, I'll show you that now in a couple of minutes time. Let's just wait quickly. It's 4.5 minutes, then of course the news will come out, and then after that we'll discuss the news, and then we'll discuss what's happening in the markets. Alright, so let's stand by, share, so we can get some people on this live view, and yeah, we can start growing this nice YouTube channel of ours. Alright, but I'll have some music on just for a couple minutes. It's 4 minutes till that news breaks. Alright, so let's have a look. Let's have a look. See here quickly, man. Alright, so we've got 30 seconds left for these numbers to come out. The core sales. And then once the numbers come out, I'm going to have a good chat to you guys about this gold thing that I did this morning. But anyways, luckily I didn't do this on my real account. I only did it on the demo account because I don't trust this thing yet. But I'll show it to you guys now in a couple of minutes. Alright, let's see. Numbers. Give me numbers, man. Give me numbers. Give me numbers here. So Canadian wholesales. I'm really interested in these two. Well, the three here. Unemployment claims. Yeah, let's see. Let's just have a look. Okay, that's good, that's the same as forecasted. Ooh, there goes the gold now. Look at that. Ooh, that is a heavy negative on it. Okay, look at that. Okay, so core retail sales is up. The retail systems sales month to month is up. I have got no idea what is going on with this US dollars and these numbers that are just coming out at random, just completely out of this world. Yo, the fully fed manufacturing index. That is a bit of a hectic one. Okay. Let's see there. The unemployment claims 227. Okay, so it's lower than forecasted, plus it's lower than the previous. So that is good for the US dollar because it means fewer jobless claims, which means the economy is growing. There's jobs in the market. Okay, the retail sales and the core retail sales. All right, fantastic. This looks very good. You know, it's not a big jump. It's a bit lower than the previous. It's like 0.1% lower than the previous, but the market expected it to be at a 0.1. So it is at a 0.4, which is better than expected, better than forecasted. So the numbers that are coming out is quite good. But not this one. Not this one. This one is not good. Not good at all. The fully fed manufacturing index. Let's read up what it is. For those of you who are not familiar, just read up on that. So, level of diffusion index based on surveyed manufacturers in Philadelphia. So, actual greater than forecasted is good for the currency. Released monthly on the third Thursday of the current month. Okay, so above 0.0 indicates improving conditions. Below indicates worsening conditions. So it's a leading indicator of economic health. Businesses react quickly to market conditions, and changes in this sentiment can be an early signal of future economic activity such as spending, hiring, and investment. So and that's that. That's all you need to know. So it's just a level of diffusion index based on the surveyed manufacturers in Philadelphia. Alright, so those of you who are wondering, a good tool to have is, and it's free to use, is called Forex Factory. You go onto it and you save it onto your desktop because you're going to use it every day. On Forex Factory, it gives you the news. So you go there, you give news, you get the calendar. This is the calendar, so you can see, you click on the calendar and then you can see what's on the agenda, when news is going to break, and what the news are. And so familiarize yourself with these. You just click on that little envelope and it tells you what it is, and it gives you a little bit of news on it. So just so you can familiarize yourself with these news, the news that comes out, so you know what market is going to do, what the market's going to do, and you can more or less have an idea of what's going on in your surroundings. To close this, because it opens this little window, to close this window, you just click on the envelope again. The envelope is now crossed, you just click on it and it closes it. Alright, so for those of you you don't have to download it, so you go on Google, you type in Forex Factory, and you go in there and you just save it, you just make it, add it to your desktop, so because you're going to use it every day. It's nice to have, and then read up on what all these things in the wholesales. If you don't know what it is, you can read up on it and see what it is. You just click on the little envelope. That's not that envelope there, on that envelope right over there next to the numbers. These here are just colors. So the red colors means it is big news that will move the markets, like you've seen there. It moves the markets. Yellow and orange, not so much. Alright, so you look out for these red envelopes. Everywhere you go, you look out for the red envelopes. Now also on this, it gives you the news, it gives you news on the gold. In anything you can want to look at, you can just look at it from here. There's a couple of things here, live trading, so you can definitely, you're going to use this on a daily basis. Alright, but from there, let's quickly jump to this gold thing that I've got going here. Now, according to my trading style, now I did put this gold trading this morning already, according to my way how I trade. I didn't put it in here because it's a bit counterintuitive here. On this demo account, I kind of use this, okay, well I'm out that now for profit in anyways, because my stop loss was there. I'm out done anyways, out the gold trade. But what I did this morning is how my system works. My system, I've explained it to you guys every time. I do a follow through. Now these, the latest swing high. The reason that's a swing high is because it went down and broke that previous low there. So that's why I know this is the latest swing high over here. So I was waiting for price to come back and break this swing high. So here price came, broke it, but went right back down. So that doesn't count. Here is the candle that broke the recent swing high. That candle over there. Now what happens is I wait for a retracement and I wait for a second push to break that high over there. The initial one that broke through and stayed above that swing high over there. So there's the second run right up there. Once I see, okay, it broke through, it broke that high over there. This morning on my account, I put a buy order in right over there at the tippity top of that one. It picked me up here and I did a follow through. That was my recent swing low over there, and then price broke above and I moved my stop loss to just below that. So my stop loss got taken out for a profit. But on the demo account, I tried this new strategy that I'm trying on the demo account, where when you see an abnormal movement like this is an abnormal movement. You put the Fibonacci, like this thing is called a Fibonacci. You put it on the tippity top there. Once you see price start building back up to the upside, then you put your Fibonacci on there from the bottom to the top, and my Fib has got 100, 75, 50, 25, and 0. That's the numbers on there. And while you see price going up, you put your sell order like I did here on the 50% mark. I had it a bit wrong, so there I did put a sell order in on this one. I didn't do this on my main account because I'm not too sure if I will be able to do this just randomly, just put in a sell order. But anyways, you put your sell at the 50% mark, your pre-order. It came there, it picked up my sell, had me in a bit of profit on here, but then of course, as you guys can see, went into the negative. My stop loss is between the 100 and the 75. That's where my stop loss is according to this strategy, this using the Fibonacci strategy. That's how it works. Okay, so yeah, so then you wait for price to come back, because usually majority of the times when you do see an abnormal movement like this, just a solid down or a solid up, usually price comes, because that leaves gaps in the market. It's called fair value gaps. It leaves gaps, and majority of the time price will come back to fill this gap, to fill this, like it did here. It came back, it filled it, and now it's on its way down. I don't know how this works, but it does. Somehow it does work. Okay, now we get this big move because of the numbers that came out, and it wasn't very good, in order for the gold buyers, but it was good for the gold sellers, because those numbers were quite good for the US that came out. The call, retails that came out. That was quite nice for the US dollar. Okay. Yeah, so this, I want to talk about this Fibonacci strategy that I'm using. That's why I'm trading here on my demo account, is because I'm testing out this Fibonacci strategy. You know, you can do back testing with it. Back testing worked out quite nicely. It gave me a good a win ratio. It gave me a profit. But me personally, because I've been trading the way I've been trading for the last 6 years, say 6 years, I've been trading the same way. It goes against how I trade. Like I explained to you guys now, I wait for a break of structure, a retest, a push to the upside, a second run that breaks that initial break of structure candle, and then I put an order in there, and that's how I've been trading for how long. And then I'm looking for market gaps, like I did on the pound USD. Like I explained to you guys, I look for these gaps in the market, and that's how I know that there's a solid support here. All right, that's why I put my trade in there early. When I saw pushback, I put a trade in there without waiting for it to break through the high and all those nice things, without me waiting for it. Anyways, let's get back to this gold. So for the numbers that came out, I'm pretty sure that we should be seeing some form of stability coming from the stock market side. If you're looking at stocks at the NAS and the US 100 and so forth, we should be seeing some stability and some stable movement. But when it comes to forex pairs, this is a bit of a different scenario. That the numbers from the US that came out now, it's a wild ride. We just see sellers jumping into the market and buyers trying to push it up. Buyers are trying to push the price up, and sellers are just not. They just don't want price to go past it, because they need how can I say, the buyers, if you're talking about it like from this angle, it's people that want to buy gold at a premium price and sell it at a high price. They want to buy it at a low price and sell it at a high price. So that's why you see a lot of selling going on and some pushing to the upside, because people buying gold, and then a sell-off, a straight sell-off on the market. Just buy, and then sell. Okay. So let's see what happens with the strategies. So far, you know, it hasn't taken this. It hasn't taken my stop loss. I was sure the stop loss is going to be taken, especially with the numbers. And usually, when core numbers comes out, you know, markets tend to jump quite high and, you know, take out. But it didn't go past that. It didn't go past these. So I'm quite interested to see what is happening with this gold. It's probably going to go down a bit lower. I just want to go to I'm in the 30 minutes now. I want to go to the 4 hours quickly. Remember, ladies and gents, I can see these guys watching. If you have any suggestions on or anything you want me to have a look at, please, you know, comment it down below, and I'll do it live, and I'll show you, and I'll, you know, give my opinion on whatever you want me to have opinion on: gold, silver, oil, stocks, any forex pairs that you want me to have a look at. I'll have a look at that. And also for the people that are online, I just want to tell you guys, I trade live. Reason being, very few of these so-called traders online, these, you know, we are big traders. You don't see many traders trading live. They all make videos and post videos of their winning trades, but they will never show their losing trades. And you will never see them trading live, because they are only there to sell you a product that you don't fucking need. That's the only thing that's going on there. You don't need. They're making money off of fooling you. Be very careful when you are online and you see these so-called trading masters. One guy that I can definitely say to you guys can go follow his videos as well, is Trader Nick. I always say this on my videos on YouTube. Trader Nick, he trades live as well, and he's a good trader. Be careful of all these people that put out videos of winning trades and making all these promises. Oh, you can be a professional trader, and you just have to join the Discord, you just have to join the Telegram page, and you just have to buy this course. You know, if the guy's making so much money on trading, why does he need to sell you anything? Think about it from a logical point of view. Why does he need to sell you anything if he's making this millions trading? You have to be clear. You have to be very clever. That Ferrari and that Porsche and that stuff that he's bragging, that big house, is not bought with money that he won trading. No, it's bought money. It's money that he got from fooling people, especially new traders. Be very careful. Be very careful. I trade live because what I do here is what I do. I don't need to prove anything to anyone because I trade live. So if I make mistakes, it's on there. It's live. Everyone can see it. So that's just my saying. I'm not gonna ramble on too much about it because it is a very, very soft point, and it's a very irritating point to me. That's why I decided to start this YouTube channel anyways, to try and save as many new traders as I can, because a lot of new traders fall for these people's tricks. You spend your last hard-earned money to buy this guy's courses and to follow his Discord and to follow his Telegram page, and you are just losing money. So please, one advice from me is, if you want to see someone and get advice from someone, get a trader that trades live on YouTube for everyone to see every day. That is the person you should follow. And plus, I don't sell any courses. I don't have a Discord or a Patreon or anything like that. I trade every day. It's what I do. And plus, on the weekends, I do music. I'm a musician as well. So I do my music on the weekends, and I trade during the week. This is what I do. I don't need to sell you anything. I don't need to ask you for money. If you find value in what I do and how I do my trading, then I'm happy. That's all I want. That's all I want. I want new traders to start trading the right way and make money. Life is shit as it is. It's hard as it is. And I want to help as many people as I can, especially new traders that jumps into trading, because they are doing trading because they need extra money. People that have got more than enough money won't go and trade, won't go and do the effort of learning how to trade because they've got money. People that want to learn to trade is people that needs extra money. And I can't stand these new traders falling into the tricks of these so-called professionals online that never trades live. You won't see that asshole trade live. You won't. Because they suckers. They just there to take your money and steal from you. Please share this video and get the video and get this out here. We need to get serious traders and serious mentors out on YouTube and follow those people. Those people that trade live, follow them. Listen to them. Not these fly-by-night wannabes and whatever. Anyways, that's my rant for now. Let's have a look at the gold. So that's the reason why I started my YouTube channel. I didn't start the YouTube channel to make money or whatever like that. I'm just trading, and I want to show people the way I trade and try and help traders. That's it. Okay. And the reason I'm on a demo account is because I'm testing this trading strategy. Like I said, I'll explain this in I think tomorrow morning at 8 o'clock when I start my trading day. I'm gonna explain this what I do here with the Fibonacci in detail. But it's not something that I want to use. It's not something I want to use because it goes against how I trade. But anyways, I'm not going to go on that. Let's continue. Let's have a look at this gold. I'm going to take this one away for now first because it's in my way. I don't like having my thing full of things. Okay. As you can see, now, if you have a look at it from this is on the 4-hour time frame. Now we do have. I've got a mental number in mind. It's $2,500 on the gold. This is what I have in mind. This is my mentality, and this is what I have in mind. But as you can see here, gold has been doing the hokey pokey on this 2,476 line here on this mark. So it has been doing the hokey pokey there, and hokey pokey there. So my end result is I do foresee that gold is going to break through and go to the 2,500 mark. Reason I say 2,500 mark because it is a mental number. It's a mental number. It's a number that everyone wants to go to. So I'm sure we should see gold rallying up to this 2,500. You can see the buyers are working on this zone, but here is a war zone right over here. I just want to add this to the chart there quickly just to show you guys. This here is a war zone. It is a war zone between the buyers and the sellers. The buyers want to push price higher. They want to have gold go higher there because then they can sell it for a better price. But the sellers that have got gold, they don't want price to go past these. So the bears don't want gold past there. That's why there's a big fight going on here. This is a war zone, and eventually the bulls will win eventually, because if you look at a lifetime of gold, I just want to show you, gold just goes up and up and up. I want to go to the weekly. I don't think it's going to load the weekly, but because my internet is not the best, but it is there anyways. Let's just wait for this one. I just want to see if the weekly loads or not. It might take a while. Might take a long while. Okay, and let's just scrape that idea. Let's go to time frames. Let's go to daily. Okay, the daily wants to load. That's easy. Okay, so if you see what gold does, gold just goes up and up. See there also gold played the hokey pokey. You can see the hokey pokey there, hokey pokey there, hokey pokey. So this was the recent war zone. I call it the war zone. There's different words you can use, the trading words, the big words, but I try and keep it as simple as possible so people can understand, especially new traders, so new traders can understand what trading is and how it works. So you can see here we've got the hokey pokey going on here as well. And then eventually the bulls won. The bulls just pushed it up to the next level. You see, and now they're doing the hokey pokey there again. So we might see the sellers pushing the price a bit further down, or maybe all the way down to this war zone level. It might happen, but it might also not happen. It's not for us to decide. We just have to trade where the market goes. When you are trading, you have to remember you are not the driver of the bus, you are the passenger in the bus. You don't know where that bus starts, and you don't know where that bus stops. Only the big guys know that. Only the institutional traders know that. They know where the bus comes from and where the bus stops. We just have to get onto the bus wherever it's going at the right place and get off at the right place. All right, if I can explain it to you guys that way. So it's not up for me to decide where gold is going to go. I'm just going to go with it wherever it is going to, but I don't know when it's going to stop or when it's going to start. That's not up for me. So the way I look at this is we see another push to the downside. So what I want to do is I just want to mark out some interesting levels. Yeah, I've got these two levels over here. I just actually want to change because I used it now this morning. I just want to change this over to a green because that is a support. I just want to make some mental supports and some mental zones where I think price is likely to go. All right, so this is one of the places where I expect price to go. It's right over there. And this is the next place I expect price to go, is right over there. If it does break down further to the downside. All right. But like I said, we are not the drivers of the bus, we're passengers. So wherever it turns around, I need to be ready to jump on it at the appropriate time. And using my trading style, the way I trade, you know when to jump in and you know when to jump out. I just want to show you guys a quick example of what I do and how I trade, because I do see there are guys online. Thank you for being online and thank you for joining this trading today. I just want to show you guys basically what I look at when I trade, just to show you what I mean when I say getting on the bus and getting off the bus. We don't know where it's starting or where it's going to go. I just want to take it in the same direction that it's going in. Okay, so let's have a look at this zone over here. So here we see not a lot happening. So what I usually do is I mark out the highs and the lows. Now, this is, you can see that the recent swing low over there. As clear and obvious as daylight, you can see that. I just want to make a second line here so I can explain to you guys quickly. And that is the high. Also, you think it is the high, the recent swing high. No, it's not. There we see a high. There we see price break through. How do you determine when it's a high or when it's a low? On this high, there's a low. We get that one there, there's a high, and there's a low over there. So this low broke that low over there. So that means that that over there is the recent swing low. And which one was it? That one over there, right over there, is the recent swing high. Alright, so what I look for when I trade is I wait for price to break the recent swing high or the recent swing low, whichever direction the market is going to go. I don't know what direction this bus is going to take. I just want to be on it as it's going. So here we see price start to tap on the, start to break through, but still comes back. So this is not a proper break of this structure. So here we see price goes up, breaks there with this candle, it breaks it, retests, and there's the second run. So that one over there is the first run that broke that level and formed a new candle and did not go below that the recent high again. It stayed above it, as you can see there. So that is the first, the break candle, and it's the official break candle. So now I'm waiting for a second run. Only on the second run do I react. So now we've got a second run going up, and it broke that recent high over there. That is what I'm looking for when I look at a trading. I always look for a second run. I don't just trade on the first run. I don't just trade, you know, when price breaks this recent swing low or the recent swing high. I trade on the second run. Then I know for sure, okay, we're going in the right direction. Here as well, let's see if we can get some confusing areas over here. Like here's a confusing area basically, so people don't necessarily know where the recent swing high or recent swing low is. How do you know if it's a swing high or swing low? We see there's a high there, right over there. That's a high. How I know it's a high? Because this moves low is lower than the previous low. So that is my new swing high, and this is my new swing low right over there. Price comes up, breaks this high over there, only by a little bit, but doesn't manage. It didn't manage to get a new low that's lower than that, or a high that's higher than that. It broke through a little bit, but it can't be, you know, it can't be said it's a high. So what I did is, there's a high, there's a low. Now I see price breaks through this high over here, which is the recent swing high, because we have a low attached to it. This is just a pop to the upside, there's no low attached to it. Now I see price broke through, came back down, and did a second run as well. So what you would look for in this instance is the previous swing high. Let's see if you get a breakthrough. Let's see what happens. I just want to explain to you guys quickly. So here you will be in a bit of a confusing situation if I can explain it to you properly now. So we see price, there's the recent swing high, broke through but didn't make it all the way, came back down. So pop to the downside. We're looking for this swing high to be broken. We're looking for this swing high to be broken. So there we see, didn't break it because it didn't sustain, it didn't stay above it. It didn't do a second run above it. There price goes again, knocks at it. This candle here broke above it, came and did a new candle above it, came back down, but ended up and popped back below it. We don't want a candle to pop below. The breaking candle, when it does a return, it mustn't go below your line. There it went below the line, so this does not count. There we see another push to the upside. That's cool because it went from there, push to the upside. That is your break candle over there. did a return. That is good. Didn't go past the line. So now we wait for the second run. There is the second run, the second candle right over there. So what I would have done is on my swing high, the recent swing high that was there, I would put a buy order in there already, expecting price to come back. Here I've got my buy order, and below that swing low is usually where I have my my stop loss right over there, because that is the recent swing low. So you put your stop loss below there, and there we go. So now price comes back, puts me in the market. Now I'm in the market. I'm in the negative, I'm in the positive, but I'm still in the market. Now I'm far in the negative, but remember my stop loss is there, because I haven't been taken out yet. Then price starts to go in my favor, and there we go. We're in the clear. Now when price is starting to go up, what I'm looking for is I need to see a break of the previous high and low to see where I need to put my stop loss, because remember my stop loss is here, and I like to do a trailing stop. So what I do is, I just want to get that thing quickly again. Where is it? There it is. Because here's my stop loss. So what I need to do is I need to look for swing highs and swing lows. So their price goes up, forms a nice swing high, swing low. How I know this is a swing high and this is a swing low is because price broke above that swing high over there. Okay, so I'm here in the market. This is where my trade is. So there we got a high, there we got a swing low. How I know this is a confirmed swing high, confirmed swing low is because I had a break of the structure. I had a break of the high or break of the low. So now I put my stop loss right over there, my trailing stop. Now I'm still in the negative there. Now I'm waiting for my next swing high, swing low. Price breaks to the upside, comes back down, and goes back up. So, and it breaks the previous high. That candle broke the previous high. So this is now confirmed the recent swing low. So what I do is with my stop loss, do a trailing stop, put it right below that one. So now I am in profit and I'm on the bus and I'm going the right freaking direction. Yes, we didn't get on the bus there because we didn't know the bus is going to turn around there. We're not the drivers. We're not institutions. We just grab the bus as it goes past. So now I'm looking for a more recent swing high, swing low. So what I'm looking for is for this high over here to be broken, because this is mostly pushed to the upside. So there's the high there, there's a low there, that low there, it's not broken yet. There it's broken. So this is now confirmed my swing high and my swing low. So what I do is with my stop loss, trailing stop, move it all the way up to there. So that candle over there broke that high. So now I'm looking for another swing high, swing low. There's a swing low, there's a swing high, because the high was broken. So that's confirmed to be a swing low. Then I take my stop loss all the way up to there, just below that one. 100% fine. So that's a swing high. Now I'm looking for a break candle. That candle there didn't break it because it popped right back down. So that's not confirmed. There it came. It put me out the market. Now I am out the market. But at least I know where the recent swing low is. It's that candle over there. And I know where the recent swing high is. It's that one over there, because that one came down and broke this swing low. Not that one, actually. This one over here. Actually, that is actually your recent swing high. Right over there. That candle right over there, because that candle broke it. So here's your swing high. And this candle is a candle that breaks the recent swing low. So now we're going to start looking for selling opportunities. So we're looking for a sell opportunity. Let's see if a sell opportunity or a buy opportunity presents itself. When do you sell, or when do you get onto the bus? When you see a breakthrough of a previous high or previous low with a second run breaking the candle that broke the structure. If it makes sense to you guys, please just let me know. So now we see there's a candle broke to the low. So you're thinking you're going to look for a selling opportunity. Came back for a retest. There's your retest candle, but it didn't do a second run to break the low of the candle that broke the previous low. So that is not a trade. You won't enter there because there's no second run. Came right back in. Now you're looking also for an opportunity where your recent high, let me just get rid of this green line over here because this is in the way. I just want to show you guys properly and explain it properly so you guys can understand what I'm talking about here. So there's your recent swing high over there, your recent swing low, high and low. Candle broke through, but did a retest, but didn't do a second run, so you won't enter in that trade. Here, you're looking for a candle to break your recent swing high, which is that one over there. Comes in, but doesn't stay above it. You have to have a candle that breaks above it and stays above it, and does a retest, and your retest must not go below and back into your zone over there. Like this retest over here, came back and started going to the upside, did a down there, so it went back into the zone. So that one, unfortunately, you will not take because your retest came back into your back below your recent high. So you won't take that trade there. You're still waiting for a break candle. So that is now confirmed. Came out your recent swing high, broke your recent swing high, came up, came for a retest, but the retest unfortunately went back into your zone. So you will not take the trade. Came right back out. There's that one there. Still not. I don't see a second run. I don't see any runs breaking that candle, or actually, because that is your recent swing high over there. That point over there, if you want to put it that way, that is your recent swing high because it did break your high. So that is actually your recent swing high. What we're looking for now is either for price to break your recent swing high and stay above it, or to break your recent swing low, which is that one over there. Now we're waiting, we're seeing time. Nope, it's not breaking. Nope, it's not. It broke it, but it came right back down, and there's no second run. So we won't take that trade because there's no second run. We're waiting for a second run to appear. Okay, so that's why I like my trading strategy, this that I use here so much, because it keeps me out of these sideways moving markets, these consolidation periods. It keeps me out of it. So only when markets are moving do I actually get into the trade. Only when the bus is moving I get onto the bus. Okay, so we're still waiting for this recent high to be broken. So let's just quickly see. This one did break it, but did it break the low? No, it didn't. So that does not count as your recent swing high because it did not break it there. Didn't break it. Nope. Do we have that? Nope. 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 We didn't see that low over there. I just want to make sure about my thing here because I'm trying to run through it quickly. Okay, so there's that one. There's that, didn't break through. Didn't break through. There it broke through, but didn't manage to stay above it. Okay, so it came right back down. Okay, there's that one. All right, fantastic. All right, so we're waiting for this high to be broken right over here. This swing high of yours, because that is the last swing high. Actually, yeah, this one here, and actually went past the recent swing low. There's a high, but didn't go past the low. There's this. Okay, wait. There's a low. That went past that low there. Okay, so but it's still the same. That's your swing high over there, and that's your swing low. Okay, so it still remains the same. Okay, we're waiting for price to break this swing high over here and remain above it. So there price came, broke through, but came right back down into the retest. Yeah, another one broke through, retest, and the retest manages to stay above your recent swing high. So that is your first push. Now I'm waiting for the second push right over here. So there's your second push right to the top and back down. Let me just open up this nicely here. So let's see, that one there broke back down. That one there actually came right back down and out. All right, retest, second push to the upside. So here's your second push to the upside. So what would have happened here is you would have been in the trade because it went up. There's your second run. You would have put a buy order in here. So you wouldn't have been in this trade. Actually, you wouldn't have been in there because your buy order is here because you're waiting for, where's that break candle? Which one was the break candle I say? That one over there, right over there. That's the break candle. So you're waiting for price to come and pick you up there. Price didn't come and pick you up there. Price moved up. Kept you nicely out of this market because the market is a bit choppy on this side. So you don't want to be or in a trade where you don't belong. So what you can do to jump into this trade, if you missed your opportunity there with that break, is to follow your break of structure retest, break of structure retest. So now let's look for you missed the opportunity there. The market didn't come all the way down and pick you up. But you are looking to get into the market. You want to trade. You want to get into this gold action. You see gold is to the upside. Let's get in. So now you're waiting. You see, all right, there's a high. You're looking for a recent swing high or recent swing low. So this is considered a push to the upside and then a down. So there is your high and that's your low. Because your second run goes right past your recent high, which is this one over there, your high, tippity top of that. There's your recent swing high, and that's a low. The reason that is a swing high and that's a low is because after the pullback here, it breaks your swing high over there. It does break it. So their price goes up. So now you know that is your recent swing high and that is your recent swing low right over there. So let's see if it wants to put us in the market now, this time around. So what I do is I put with this breaking candle over here, there's the candle that broke it, plus there's your second one pushes to the upside. So once it pushes to the upside, I know that's my second run to the upside. You put a buy order on this line, a pre-order. So while price is there, you already put your pre-order in, and then price goes, picks you up, puts you in the market, and look at this amazing run to the upside. So now you're in the gold because you're going with the bus. Now you're in. Now we're looking for a swing high, swing low. So there we see price pull back, and then price breaks that high there. So now you know you can take your stop loss, which is below the swing low, and put it up in profit because there is your recent swing low right over there. It's confirmed the swing lows because it came back and then after that broke the recent swing high. So there is your new swing low. Now you see market comes back, pushes to the downside and then pushes to the upside. Now if you want to, you can use that also as your recent swing low right over there. There is your recent swing low. Fantastic. Now we're in the market. We're in the market. Lekker. In a good profit. Price comes up. Their price breaks down and breaks right through this, your recent swing low. So it puts you out the market, but you were in a profit. So now we know we're looking for a selling opportunity. We want to sell. So that is your break candle there. That candle broke down, did a retest, but there's your second run, but your second run did not break the recent swing low. Your second run there did not break that swing low. So you waiting for a second run to confirm that is your recent swing low. You need your low to be broken. That second run there didn't break the market. That one there broke it, but came right back down in. So you won't be in this market because you're looking for a second run to go above and stay above your recent swing low or below your recent swing low. So we are waiting for a candle to break this recent swing low and stay below it. Let me just get this all the way there. So look again, my style of trading, but waiting for the second run keeps me out of this choppy market because now I have got my recent swing high, which is that one over there because it broke. So that's my swing high, and that is my recent swing low. Didn't break, broke through it. There we go. And now you can actually start moving your swing low again. That one is a bit lower than the one there, and it broke to the upside and broke that. So that is now your recent swing low right over there. That's it. And that is your recent swing high because it didn't break through the high yet. So there's your low and there's your high. So now we're waiting for price to break through either your low or your high and do a second run. Remember, we're looking for a breakthrough candle, a pullback, and a second run. Breakthrough candle, pullback, second run. Pulls back, doesn't go through. Here is a candle that broke your whole structure over here, came back, but unfortunately you won't jump into this one for a second run because it came right back up for the return. The retest came right back into your recent swing low zone. So you unfortunately will not be taking that trade. There's a second run. You just wait for a new low to form or a new high to form. So that is now considered your new swing high because it came up for retest and broke the recent swing low. So now we have to move this one to your recent swing high. That's what we're looking for. And this will be your Let me take this one away so we can see it properly. And this will be your recent swing low. What are we waiting for? We're waiting for price to break. What is it? Yeah, that's your swing low there. Waiting for price to break that swing low. There's your candle that broke it. There's your retest. But you see there's no second run. There's no second run in there. Because that is your first initial run, your first breaking candle. That's your retest. Your retest didn't go back above your recent swing low. So this is valid. Now we're just waiting for the second run. Your second run needs to be lower than that one there. There's your second run. It doesn't go to the low because this is most now your new swing low over there. And that's your new swing high. So we're waiting for the second run to go below your swing low. Nothing happens. Nothing happens. But what happens here is interesting because now we are starting to see the formation, and this is where I jumped in this morning into this trade. You're starting to see a formation of new highs and lows being formed. So price pushing to the upside. Price is pushing to the upside. There we go. That's there. Okay. So we see a break of this recent swing high over here. This one right over here. We see a break of it. But it's not your swing high per se. But we see a break and we see some structure forming. So what we'll do is we'll see what happens with this one, like I did this morning, is I put that as my swing high and that is my swing low. So I waited for price to break through and sustain the breakthrough. Didn't break through, didn't sustain the breakthrough at all. So I was waiting for it to do a break. There we see is the break, pull back, and it stayed above that. So here is my second run. That is my second run there. So now I know, okay, so there's my first run, there's the pullback, and there's my second run. That's doji, so you don't consider that there has to be body to the candle, otherwise you count it as one run. So there we see is the second run, and it broke through that recent swing high over there, which is that one over there, which broke through that one, broke through, nice. So what you do is on that swing high over there, you put your buy order on the tippy top. I put my buy order in there this morning, right over there. Price came back, supercharged, and I just did a follow-up after every swing high, swing low. Just did my follow-up over there, and I did the follow-up over there. That's why I was actually here, and I got taken out on this one. So now we just do it all over again. That's how I trade, and that's how I keep myself out of trouble the whole time. I keep myself, the way I trade, I keep myself out of sideways movement and out of big movements like this one here. I think tomorrow morning I will explain it all a bit more in detail, and I'll explain this strategy that I use with the Fibonacci. And look at it, on this trade, I did put the Fibonacci trade in this morning as well. I did put the Fib in there. This is the one that I'm testing out, this Fibonacci. Whenever you see radical movement like this, you put the Fib on it from the top to the bottom, and on the 50% retracement like there, I put my sell order in, hoping for the best. You put your stop loss in the middle of the 175, and so far it's working good. I'm $29 there, but I did put my my lot sizes a bit down on this one because I'm not too sure about this. But anyways, so far in profit with this one, but we'll see how it goes. Sheesh. I want to work on this strategy, but I think I need to do some more thinking on it and have your input. You know, I just want to have your input on this trading strategy with the Fibonacci. I want to see if it can work, or maybe we can build it a bit better. Maybe put some rules to it. I don't know. I've got no idea. But this goes against everything in my being. It goes against everything in my being. Just to randomly put a sell order at a place and hope for the best. Eesh. Anyways, I'm not going to take too much of your time today. I hope that explains the way I trade, especially when it comes to the forex pairs. My forex pairs I trade on the 6-hour time frame because you know I don't want to sit in front of a computer the whole day. The gold I do trade on the 30-minute time frame, and my strategy of a breakup structure, breakup highs and lows works like on the 30 minutes. But the rest of the pairs, all I do is work on the 6-hour time frame because I've got a life as well. From my side, have a good one. If you've got anything you want me to have a look at, please ask me. If you want me to explain something a bit better, also ask me, I can definitely do it. Just comment down below in the comment section, and I will go live and I will explain it to you to the best of my abilities. And if you need any more further help, just comment down below, share this YouTube channel, and let's grow it as a community. From my side, you must have a good one. Cheers, cheers.